Hi, Tim Bigham for Delta Derivatives, Option Hedges and Edges, taking a look at a market that's finally starting to slow down here. We've had one of the biggest rallies to start the year ever. Certainly all markets up about 5%, but today I think it takes a tsunami to maybe slow this down. We'll see what effect that has. But overall, I kind of like selling out of the money call spreads on some of last year's big winners, Caterpillar and Boeing being the two names. Those were the two best Dow performing stocks. Also struggling up here, so going up to traditional February options, one standard deviation out, collecting about 70 cents on a 5-point spread, just looking for these stocks to level off here going forward. Goldman Sachs, another name, double top at Goldman yesterday, had bad earnings, the stock rallied, ran into trouble. Same kind of trade there, selling out of the money call spreads. Like the fact that skew, the difference between the puts and the calls, kind of reverted. Calls expensive to puts traditionally, so I like selling out of the money call spreads here. More betting on a slowdown than a pullback here, because certainly that elusive pullback remains elusive to say the least. Seeing some big option volume on a couple of names yesterday, Celgene and also Yum Brand. So following along with that, Celgene, huge call buying in February. Earnings coming Thursday. I'm using the fact these call buyers lifted IV up to sell out of the money puts that were actually up with the stock up slightly. So selling 6-point out of the money puts on Celgene, just banking on that call buyer being right. And Yum Brand, same trade there. Feb 82.5 calls. Calls were up actually more than the stock. These are 50 delta right, kind of at the money option. So I'm going along buying the stock, selling the calls here, capturing that big implied volatility jump. So we'll see what this market brings, but until we have a pullback, we kind of don't. So until next time, here's the good trading. Take care.